Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media account. Also, please like the video, subscribe to the channel if you haven't done so already. I did finish the week with 14 wins and 2 losses for a win rate of 87.50%, so definitely a good week. Pleased about that. Didn't really trade that much this week. I just kind of was patient. And the mornings have been very, very either choppy or fake out, so I've been kind of waiting out the mornings a little bit more because of that. And so with that said, we'll just get into it. The trade ideas room on the 7th, which was Monday. SPY calls of a 450. Where is Monday? Right here. You can see it ran up Friday a little bit, then it sold off, and it started to go up a little bit pre-market. This candle just kind of threw all my charts off big time. But anyways, what did I say? 450, which is, yeah, right there. So big psychological number. That's why I chose it. Didn't quite get there. First candle was green. It dumped. Broke lower day. I didn't take it. Yeah, that candle's messing up my chart. There we go. First candle was green. Didn't break new higher day. It was just a dump down here. Then it just, when it made new lower day, it just didn't really take. It just bounced up quickly. Then it dropped more. It just, I don't like seeing things like this. This is fake out. Usually what's been happening to me is that if the opening candle is green, I will take it a new higher day, then it will pop just a little bit to get you in, then it will dump. So sometimes I'm kind of cautious about that, and I kind of wait to try to get a feel how the morning's going to go. And when it came down to new lower day, I thought about taking it, but I didn't. I hesitated. Then we had this big green candle right here. As you can see, it opened right down here near a lower day. Then it popped. In fact, I think I was thinking about taking puts right down here, but I didn't. But yeah, opened right here, and it tried to break over this area, the 449.25 area, and it didn't do it. Well, it did for a second. Actually, no. Opened here. No, it didn't break it. Came back down. Then it opened here, and because it got shot down right here, it did actually break it right over here, but anyways, when it didn't break it, this candle, it came down and it opened here, and it came back to lower day again after it tried to recover. I grabbed puts. I was thinking, okay, maybe this will actually drop. So I grabbed the 44.85 puts at 640, and then went from 640 to 740. Got a dollar move. Then it quickly got bought back up. And then it came back up to this area of the 449.20, 25 area. That's where I did switch to calls. Now, if it actually broke this area up here, I probably would have taken the calls, but it almost got there, then it dumped, and then we took the puts down here. Then when it made new lower day, it got quickly bought back up and quickly came back up to this area again. So, I mean, it almost broke here, not quite. Then it got slapped down. Then it made new lower day, and got bought back up. Then it came back up to this really quickly. When this does this, drops and recovers quickly, I will usually jump in it, because it usually means it was a fake out. They're taking out stops and stuff like that. So I did grab the 45.05 calls at 790 right here. When it broke above this 449.20 area, I got them at 790, and they went from 790 to 1035. So they ended up being a nice play. Then I grabbed puts at 1119, which is right here. I probably should not have grabbed it right there, but you know, I was thinking, I mean, every time you get this rounded top right here, it actually worked out. If you were to take it like underneath the wick, I wouldn't have taken it underneath the body because it's too close to the top. But I would have definitely taken it underneath the wicks. I didn't take it. Sometimes when you have these rounded tops after a pop, they end up being a fake out and ripping more. So sometimes I wait for it to go down to the next to break down the last lower high, or the last previous high, not high, low, sorry, which was this area right here. Then I just like, okay, I'm gonna take it here, and I did. I took the 44.95 puts at 790. Then it popped. Then it came back down here. I added more. What, 1156? Yeah, I didn't take it right here. Yeah, I got it here. Yeah, I added more. I thought I was going to add more right there, but I didn't. I added more up here at 1156, which is right here. And the reason I took it here is because I was thinking this was going to stay in range. Because right now, this is looking very rangy. It's getting slapped down at 449.70-ish. It's staying above 448.30. So it's staying in a range as of right now. So I was thinking from the point of view, okay, I'm going to take it right here. I'm going to add more at $3 because I bought it at $7.90. Added more at $3, make my new average $5.45. And I was thinking, okay, it's going to stay within range. It started to dump right here, and then it took off, and it kind of broke out the range. So I ended up stopping out at like $2. So it didn't work out, but my thesis was I was hoping it would stay in the range, and it just didn't. It broke out. So it is what it is. And then the next trade I took was at 112, which was right here. Not 112, right here. Not quite sure. I mean, not quite sure why I took it there. I could see why if I took it here, but I took it up here. But anyways, I took it right there. Took the 45.10 calls at 520, and then went from 520 to 630. So I got almost $1 move, well, $1 plus move. So then it dropped down, then it popped right here. I think if anything, I probably bought it here when it broke high a day. I don't know why I would have bought it right there, besides breaking high a day, but I'm not quite sure why I did this. I should have definitely taken it right here over this 449.65 area, but for some reason I bought it up here. It is making new high a day. Then it pulled back, then it popped right. This is probably where I sold. I probably was underwater a little bit, then it popped and went green. So I probably ended up selling right there, but I did catch calls at the end of the day at 337. Now I get why I bought it here. You get the bodies of these candles right here, right here, right here, and here, and here. And you get like 1, 2, 3, 4, 5 candles right there. So if it gets over the 450, 10 area, I'm taking it. And it did. I took it. I took the 45.10 calls at 370, and they went from 370 to $10. So 100% play right there. That ended up being a good play. I have not been having good times catching end of the day plays. It just the end of the days used to be my favorite, and they just are terrible now. I just don't like them anymore. They just don't go anywhere. Now on Tuesday, I didn't post my Tuesday stats. I posted them on Wednesday with my Wednesday stats. So, but yeah, Tuesday, Trader's room on the 8th puts on a full 46.50, which is right here. This lower candle, when I rounded down for the 50 cents pre-market, I always round down to the nearest 50 cents or a whole dollar to make it easier. And there's so much volatility. If it's gonna break, it's usually gonna break with some speed. So first candle was red. And then when it broke new low a day on the next candle, I took puts. I took the 44.75 puts at 640, and they went from 640 to 1220 right there. That ended up being a really, really good play. Then I took puts again at 1057, which was right. I don't know why I didn't take it there. 1057, right here. I probably took it right here underneath the body of this candle, and the wick of this candle lines up with the body. So I definitely liked it right there. I took the 44.60 puts at 650, and they went from 650 to 760. So I got $1 plus move out of that. That ended up working out pretty good. Then you have this inverted head and shoulders right here that it popped right there. So I only took 2 trades on the 8th. I don't know why I didn't take more. I don't know if I had something going on. The wife has so many doctor's appointments, and she's getting them like once every 2 weeks now because she's getting at the tail end of her pregnancy. So once the baby's born, I won't have to worry about the doctor's appointment so much. But yeah, that I probably had something going there. I don't remember what it was. But anyways, that was it for Tuesday. Just 2 trades, and let's see, Wednesday I took more. Let's see, Wednesday the 9th. Yeah, the 9th. I traded his room on the 9th. SPY puts on the 449, which is this low right here. Let me back this up. 449. Yeah, we get this lows right in here, and you get this low, but it's too close to yeah, because I think I called it right around here. No. Yeah, I was calling pre-market right around here, and it's already at this low right here, so I rounded down to 449, which is basically you can see it rejected it here, and it's supporting right there. So yeah, that's why I picked the 449, the nearest dollar down. First candle is red. I took puts right under, broke underneath lower day. I took the 44.9, yeah, the 44.90 puts at 750, and they went from 750 to 840 right there. Not too much. This is what I was talking about. They can have a little continuation of pops. So then it just chopped. It just chopped like crazy. I did take puts again at what, 1050? Yeah, right here, 1050. I took the 44.90 puts 1050. I took it right here. Yeah, I took it. Yeah, I think it took it up here. The thing that's puzzling me is, okay, I took it the 44.90 puts at 690, and then went from 690 to 1140. So yeah, that does make sense. Okay, for some reason it just didn't look. It looks like it should have been a bigger move than that. But I mean, it's what, a $4 move. So yeah, I grabbed it right here, breaking down. You get a nice little bear flag going right here. You get all these wicks in the body right here. So definitely taking it underneath 448. 10 was the way to go, and that's what I did. And the 44.90 puts went from 690 to 1140. So that ended up being a good play. Then I took puts again at 1143, which was right here. Nice big red candles right there. Nice FU setup, which is what was right here. If you don't know what FU setup is, watch the video lessons. But FU setup, I didn't take it right there. Then I had these big red candles, and I had a green candle, nice FU setup. So when I broke below the 446 area, I grabbed the 44.70 puts at $8, and they went from $8 to $14.40. So that was a great play. Then I took puts at 332, which was right here. Yeah, 332 right here, right when it broke. I'm not quite sure if I took it underneath the 447.60 or 50. Anyways, I took it right in here, and I definitely like the puts right here. I remember going in heavy, I think, on this one too, because you got a head and shoulders. You got the head, the left shoulder, the head, and the right shoulder right on VWAP. So if it broke below VWAP, it was going to tank. And those 440.90 puts I had at $4, they went from $4 to $20. So that ended up being a big move right there. So definitely 2 good days right there, Tuesday and Wednesday. Thursday the 10th, trade 8 days room. SPY puts on the 448. This is where we had the inflation news, 448. What did they say? 448 on the 10th. I got the 10th right. 448 right here. Oh yeah, it might have been up here. Yeah, 9 o'clock. Yeah, I posted it right around 9. So yeah, I picked that because of the low rate here. And it didn't quite get underneath 448. Got really, really close. Yeah, it did for like 1 penny. The low is 447.99. But I don't buy the first 10-minute candle. It's too much indecision, too much volatility. Market doesn't know where it wants to go. So I waited. I was looking at the put side because inflation wasn't that good. Not with the news wasn't that good, but yet SPY just took off. So it had the nice big green candle. If I bought calls of a higher day, they would have taken off and done good. But sometimes, like I said, it makes a strong green candle, and then it looks like it's going to take off more, and it just gets you in just enough, then it dumps on you. It does this on either direction lately. Not as much as it used to, but it used to do it months ago. It used to do it all the time. It was really, really ridiculous, but didn't take it. Plus, I don't like seeing a $2 candle at open. I don't like seeing an opening candle at a $2 range, because at most days that's a full range, especially on a range day. So I was not chasing it. So that was another reason why I didn't take calls. Plus, the news wasn't good. So I waited and waited and waited, but I finally took it at 9. I took puts at 956, which was right here. I took it up here, 451.50. I think it had to do with max pain. And I think max pain this day was 451. So when it got above 451, I grabbed puts. I grabbed the 45.10 puts at 740, and they went from 740 to $18 on that. Now we have a little in the room. We have a little max pain theory, and it's been paying off pretty good lately. The market's always evolving, and it's always changing. It's always doing its own thing. What's working today might not work tomorrow, and vice versa. So you just gotta adapt to what's happening. Be fast to recognize things. To recognize the patterns and the circumstances that happen and adjust to them. So in the past, open interest, whenever we had max pain, the market would settle, would find its way to max pain. The market makers would try to make as many high open interest contracts become worthless as much as possible. That's been the name of the game, and that's what they love to do. Because the whole point of trading and from the market maker's perspective is to try to take everyone's money. And if there's a lot of calls, if there's a lot of puts, they try to don't have them get settled or exercised, because they want to try to take that money. Now, just always remember that market makers want to steal your money. That's the whole primary objective to them. That's why you see when there's a lot of open interest, they become put walls, call walls, and they don't go in the money. They don't go in the money at close and get exercised or stuff like that. So you just need to be aware of the open interest, because in the past they used to settle at max pain to make as much of the contracts as worthless as possible. But lately, what's been happening, I've noticed the last couple of weeks, is like if the market opens, like for this instance, the market's opening around 448 and max pain's 451. If it opens underneath max pain and it pops into max pain or close to it, it will end up selling the pop. So basically, if it opens underneath max pain and it pops, they short the pop and it drops. Now, if it's the other way around, if we'll just, for this instance of this chart, say the max pain was 445, it opened above it, and if it drops, it gets bought to stay above 445. So that's pretty much what has been happening the last few weeks. Just keep an eye on where max pain is. Now, if it opens up near max pain within $1 or two, I don't think it has as much weight. It's when it opens up like a few dollars or even several dollars underneath or above the the max pain. That's when you end up seeing the move. Because we were at 448, max pain was 451, and we had bad news. I took the chance on grabbing puts. It would open underneath max pain. And it did go into max pain, but you got to remember, just because it's in max pain, it has to close too. Because you see so many people saying, oh, max pain is 451, we're in max pain, it's going to stay above 451. But no, we've seen so many times in the past where max pain will be like 451, going back to the previous setup, that it will, just because it's above it or below it doesn't mean it can't close at it, because we've seen some really dramatic last 10-minute candles. Well, they'll, if the max pain was 451 and it's trading at 450, then you'll see it push to 451 to get it in max pain to make the contracts worthless. So you always got to remember, just because it's there now, 10 minutes from now, it won't be. And we've seen so many times where if it was max pain under the previous strategy, that we've seen where if it was down at 450, that it magically jumps above 451 and closes at like 451 and change. Like literally, we've seen times where it will close at like 451 and 1 penny, just to get it. So they're at max pain. So max pain is very, very tricky. I know I'm probably confusing you, but to rehash it again, if the market opens underneath max pain, most of the time, 90% of the time, if it pops, it sells the pop. If it opens up above max pain and it drops, the drops get bought. So nothing is 100% in trading, so don't go all willy-nilly and thinking that has to do this. The market doesn't have to do anything. That's just the pattern it's been, and that's been what it's doing. And I noticed it really, really quickly. I'm pretty quick at noticing certain things. And so I've been trying to take advantage of it. So that's what I did here. Then I took puts at 1101. That was, 1101 I took puts, which is right here on the FU setup. You get the big red candles, green candle. And I got below the 449.25 or 20. Yeah, the 449.20. I grabbed the 44.90 puts at 7:30. And they went from 7:30 to 10:10 right there. Got a nice little move. Then I took puts again at 12:54, which was right here, right there. Get this drop right here. Started to come back up, a nice little fake bounce. And before they end up having a real bounce, I tried to take out stops. So this is what I was thinking. If it got below the 446.80 area, 85 area, I was taking puts, which I did. I took the 44.75 puts at 760, and then from 760 to 1290. And to me, I thought this was an area where they were going to flush out stops before they rip it in the other directions, because they love to do that stuff. They'll have a bunch of red candles. They'll start to have a little bit of bounce. People would start jumping in calls for a V rally. Then magically out of nowhere, they'll just dump it to new lower day to flush out stops, because if you bought calls, you probably bought them here or up here, and your stop's going to be here, and they flush out the stop, then they end up ripping it afterwards. So you see these stop hunters all the time, but this wasn't the case here. But the plan was, if it was a stop hunter, I was taking it because of that, and that's what I did. So, and that's pretty much it for that day. Friday, I don't do good on Fridays for some reason. I still don't. I didn't trade that much, but Friday I just had wife had doctor's appointment. I had other personal things I had on my mind, and this just was not a day I was willing. I wanted to trade. I just was not in the zone to trade. My mind was other places. But anyways, I did take a trade at 1049, which is right here. I pushed up, rejected the 200 EMA, came back under the PDC. When it got underneath PDC, that's where I took it. I took the 44.60 puts at 7:30, and they went from 7:30 to 13.50, so they ended up being a good play. Then I took calls at end of day right here, 325, right there. And I see why I took it here. We're making an ascending triangle right here, making higher lows. It's kind of flattening out. Well, actually, more of a, you could say it's symmetrical triangle right there if you want to draw it like that. But I was looking at it from this area right here, above the 446. So I was making higher lows, higher low. And it tried to break out this area, got slapped down, got bought, and it got slapped down a little bit, and it quickly came back up. And this is where I bought the calls. Then it dropped down, and that was pretty much it. I thought for sure, because it dropped here and got bought quickly, that we were going to pop, and we were going to at least go to 446.50 or even 447. But it didn't. It just kept rejecting this 446 area, and the calls I took at the end of the day just ended up being a loss. So it is what it is. It just didn't work out. But I mean, to me, I probably would have taken that trade again. But yeah, I was pretty distracted Friday, so I didn't take hardly any trades. Probably a good thing. I probably should have just took that one trade and called it a day, but I don't know. I thought we would get maybe another end of the day move, but Fridays are the worst to do end of the day plays. Nothing seems to happen on Fridays end of the day, which is kind of sad. But we used to get some massive moves end of the day. End of the day moves used to be my favorite. That's where you'd turn the dollars into pennies into dollars, but you're not getting those $1 to $20 moves at the end of the day anymore. You're just chopping, and it's just not happening. I really hate the end of the day moves now. So with that said, that is the recap. I hope I didn't confuse anybody too much on the Max Payne theory. So if you have any questions about it, just ask in the room, and we can clarify it in there. A bunch of people in there understand it and point it out all the time. So just ask in there if you have any questions. So that's going to do it for the recap, and thanks for watching.